Welcome to Things Invest, where we be talking about investing, finance, and professional development. For today's videos, for entertainment purposes only, what I'm going to be talking about today, I'm going to be talking about Tesla, TSLA. I'm going to give you guys my rationale on why I've decided to invest $750,000 of my own money to buy close to about 1,000 shares of Tesla in the span of just the last couple of weeks or the month or two so far. I'm going to go through my thought process and my perspective on what's the real reasoning behind this rally that we experienced in Q4 last year. Also going to give you a juxtaposition perspective on the logical reasoning behind this whole sell-off that we've been experiencing in Q1 and a little bit of Q2 so far. And I'm also going to give you guys my technical analysis to give you my rationale. Where do I see the stock going from here ahead of earnings? And what's the best price points for us to watch out to get into the stocks at the moment, right? And lastly, as a side bonus, I'm going to give you guys my price target for Tesla for the end of year 2021 as well. So stay tuned, stick around, and let's make some money. My name is Maurice Ain. I'm a former Wall Street investment banker at JP Morgan and subsequently a private equity investor for about half a decade of my life, and most recently a tech executive at a Silicon Valley based technology company. So it's basically in total of about a decade of my life, both on the finance side on Wall Street and also the operational side for both private equity and tech operation as well. So now I come here on YouTube, try to utilize the experience and the knowledge that I've acquired in the 1 decade of my life so far to try to help people around the world, right, to gain that financial freedom and also that financial literacy that we all striving for. All I'm asking for you guys to do is to hit that like button below, hit the subscribe button below, and that notification as well. It helps me, helps with this channel as it's slowly growing, and most importantly, it helps with you guys, right, to get that YouTube algorithm going to hopefully spread the good work that we are doing here so we can all subsequently rise together financially and successfully. So before I dive into my rationale and my thesis around what's been driving this whole rally last year in Q4 2020 and this whole sell-off in this early year Q1 and a little bit of a Q2 so far in 2021. As you saw from yesterday, we did see some sell-off across the EV sector, but most severely on the small cap EV stocks like NIO, Li, XPeng. But just look at Tesla for TSLA. The time of recording right now is 7:18 a.m. Eastern time, and I'm recording as of April 16th. So today's a Friday, so happy Friday to all of you guys. So what happened yesterday, right? We basically opened at a top right here about 7:43, and immediately we sold off around the 10 o'clock mark at 7:21:31, and then slowly we bounced back up. You know, the 10 o'clock mark is basically the time that I typically buy in. And that's when the reversal typically happens in terms of like a momentum trade that I typically like to do for stocks like Tesla, which is, you know, sometimes it's driven by momentum, but obviously on a long-term perspective, driven by fundamentals. But in the short term, if you're a trader, 10 o'clock is often the time that I like to buy at the dip, which is most of the time the bottom for that specific day. So going down, you can see that it hit 721 at one point, and then slowly rally up. People start buying in, the bulls start coming in. Excuse me. You can see that the RSI at that point was oversold, so that immediately came back in. And I also love to watch these charts here at the time, you know, just to watch out for the RSI. If it ever dips around the 30 level, I typically, you know, just get in around that time for a quick buck. But for me, Tesla is a stock that I hold for a long term. It's something I don't typically do day trades. I typically invest, and investing is a very different mentality and different mechanism in comparison to trading. So anyway, so keep going. You can see that we hit 721 at one point and rally back up to the 738. So pretty drastic move here, about like 30 bucks of movement, and then subsequently sold off from there. You see that the bear came in again and dipped all the way back down to, you know, the 724.72 level right here, sometimes around the noon. And noontime is basically when the people on the Pacific time, the West Coaster, start to come in, and you saw that they pumped it back up around lunchtime, and slowly consolidated from there. And then by the end of the day, We closed basically net nothing. We didn't really move much yesterday. We are up by about 0.9 percent for the day. So overall, just consolidating like we have been for the last couple of weeks so far. So first, I like to talk about what happened historically, right? What happened to Tesla? What drove this whole rally in Q4 last year? You know, driving the stock from like the $400 price level all the way to the $900 price level, right? So I took some time to do a little bit of research, collectively gain my insights from my observation in the last couple of months so far, and I've collectively aggregate these 5 fundamental bullet points. Okay, and the bullet points are ranked basically from the most macro level all the way to the most micro level. S&P 500 inclusion. As you know, Tesla historically has this bad reputations for, or this media affectation more actually, for being a business that is, at the blink of bankruptcy, or they were not profitable. Elon Musk was crazy for doing what he was doing. He was basically burning cash. It just had like a really poor media affectations that gave fear among investors and thinking about investing into Tesla, right? So as Tesla as a business as a whole fundamentally start to shape up, right? To our surprise, S&P 500 and Wall Street, if you may, decide to validate Tesla as a stock, right? And that gave people confidence. That gave fund managers confidence, and that subsequently, put Tesla at the mark of being a legitimized company rather than just like a hype stock or like a cults like following type of investment opportunity, investing into Elon Musk like he's a god or something, right? So this inclusion, obviously mandatorily require fund managers around the world to allocate part of their index holding into Tesla stocks, and by selling or liquidating their other holdings within their index fund, right? So with this large cash injection, it subsequently, inject and propel the capital allocation within Tesla stock, and subsequently have that push effect of the supply and demand, obviously for the stocks, right? And in addition to that, because of this validation on Wall Street, it also has a very positive correlations to retail investors at the same time, right? And when that happens, with this combination of both the investment managers' cash infusions and the retail investors' cash infusion, this subsequently propel as a macro factor for this rally, right? And on top of that, um, Tesla, they were able to prove to Wall Street as a secondarily factor with their impressive quarterly earnings results in both Q3 and Q4. Beating their productions expectations, beating their profitability expectations in terms of both op margins and also in their gross margin perspective as well. So um, it basically double validated their growth prosperity going forward, which it just serves as a supplementary factor to the first bullet point of the S&P 500, right? And number three, stock markets are, you could say the stock price is driven by financial metrics. You could say that is a quantitative thing that you use to gauge the success or the valuation of a business. But I would say is basically 50-50 with both quantitatives, but 50% qualitatively driven by human psychology. Okay, so when you saw this, huge push in both the S&P 500 inclusion and also with the great quarterly results, it drove this euphoric FOMO type of mentality among retail investors to buy in. And when people are FOMOing, selling their houses, selling their cars, or using all their life savings to buy into the stock, it had that triple whammy effect, driving the stock to a level that you know exceed actualized type of thinking or a realistic thinking, if you may, right? And number four would be the Cathy Wood effect, right? Cathie Wood has been a huge bull on Wall Street, pushing Tesla ever since it was like at the $200 level, right? She made a very bold statement, announcing to Wall Street that her price target, based on her thesis statements, that it will reach $4,000 level sometimes in 2025, right? And we completely shatter her estimates of $4,000 pre-split, right? We hit $800 level last year in Q4. And when we saw that, it basically legitimized or validated Cathie Wood as one of the Wall Street celebrities, and knowing the fact that Tesla has this like cults like type of characteristics about the modes of this company with on top of the following of Elon Musk has, right? It further propels the stock price to go up. Just take a look at the Cathie Woods ARK Invest holding. You could see that ever since the whole downturn in early of this year, she's been buying very aggressively, holding about 5.5 million shares in total. And she hasn't really liquidated any, and she's been buying ever since. With some obviously some uh, allocation adjustments because she has to hold a certain amount of percentage in her fund. She cannot just keep buying and buying and buying. I think if she could, without like any mandatory restrictions from her limited partners or her investors, she would be buying way more than just like the 11.6% holding that she's currently sustaining, right? She will be buying way more. But it's just, part of being a public investor, you have to be following the rules. You have to be frugal. You cannot just be overly aggressive. But you can see that she's been buying quite a lot on an annual basis so far, and also on a daily basis. You can see that she's buying quite heavily, every single day. So lastly, for my fifth point, window dressing among fund managers. So typically at the end of year, some fund managers like to, beef up their performance metrics, right? And how do you do that? By investing into high growth stocks that have great returns, and knowing the fact that Tesla has been rallying quite significantly. It was just like a momentum strategic move to provide optics or optical affectations to their investors for fund managers to, you know, basically push up their performance metrics slightly higher than is expected. And that's also gave like a micro effect into the stock as well when these fund managers are buying, on top of the S&P 500 inclusion, but on top of the window dressing alongside with all these effects, which subsequently drove this, like, I would say, craziness, this euphoric pump to the stock. So now I want to talk about what's been causing this whole sell-off in Q1 and Q2 so far, right? So collectively speaking, parallel to what's been rallying in Q4, I want to talk about in the same perspective, right? Just synthesizing all of these insights and the key perspectives that I have identified so far, right? So ranking from the most macro level all the way to the most, intricate or micro level, if you may. Starting from the first one, market cycle from euphoria all the way to actualization. So I want to show you guys a chart that I've identified here. So looking at the Tesla chart on an annual perspective, right? You can see that we have ran up significantly from when we decide to S&P 500 include Tesla all the way to that euphoric pump. At one point, we hit about the $940 level. So just look at the chart right here. You could see that it had that pumped up, the euphoric pump, and then slowly sell off. And in comparisons to this chart, doesn't it look very, very comparable, right? The same thing for, starting from the bottom with the disbelief, oh, Tesla's not going to be S&P 500 included. Like, this company's going nowhere. It's going to go bankrupt, or like it's not financially stable. The business fundamentally is not sound. To, having hope, right? And I think S&P 500 was the hope catalyst that subsequently created this whole rally push. And then like people start coming in, fund managers start buying, retail investors start buying, and people, the cult followers start believing. They sell their house to basically buy Tesla stocks, and they have this, this thrill level, buying the stocks on margin, right? Buying the stocks on selling their house, selling their grandma's savings to buy the stock, right? To the point we hit that $900 level, to that euphoric moment. And I think a lot of people actually bought in at this level, and they've been bag holders or lost significant amount of money buying at that level, which I've seen a lot of people have done. So you can see that the chart is basically in comparison identical to how this is right now, and you can say that we have already passed the complacency stage, we have passed the anxiety stage. Right now we are just kind of consolidating right now, right? Which makes sense, right? That's what's currently happening right now. We passed the anger levels, like what the hell happened. And I think we already experienced this sometimes in March when we hit that bottom of like six not six 500 and eight $23 a share at one point at the bottom. If we look at it here, yeah, 567, sorry, at the bottom, and now we're just consolidating sideways, which, and now we are slowly having this recovery. You know, uh, this is called disbelief, but the cycle will recontinue, right? It's gonna go to a disbelief, and then slowly we'll come back to hope, which I think that's what's going on at the moment. If you look at it, we have this like sucker rally, right? That you saw from the chart, and now we're having this slow momentum push. Having more hope, more optimism, right? And I foresee this to continue to consolidate going forward. And as we build up more momentum, we're gonna have more optimism, and eventually we're gonna go back to the euphoric pump again, which is typically the market cycle like we see in this chart in front of us, right? Second point, sector rotations, right? So Q1, was a time for a lot of fund managers and retail investors to rotate some of their growth earnings that they have had, as we saw from Q3, Q4 last year, to more of the value-based recovery stocks, as we are projecting that we are poised for recovery going forward. In economically speaking, we have a potential of going back to work sometimes in summertime of this year, and is an ideal time to obviously liquidate for some profits. It just makes sense to take some profit, knowing the fact that we have made such significant gains in the growth stocks last year. It just makes sense to take some breather and also like reallocate strategically into more value-based stocks. More larger cap stocks like Amazon, like Google, etc. To to those stocks more heavily in the allocations, but also like some exposures into the recovery stocks. I'm not saying like buy AMC or buying like Royal Caribbean or like Carnival Cruise, because that's like a whole nother discussions, and those companies are at the blink of bankruptcies. If the government doesn't like give them that financial support, right, that they need to sustain their livelihoods or their business, right? So this is just more of like a seismic sector rotation rather than anything that is detrimental to Tesla in a business fundamental perspective as a whole. So the third point, the fear of inflations and the 10-year Treasury yield spikes, right? So with respect to this whole COVID pandemic situation that we've been experiencing for the past year, the U.S. government and the Federal Reserve have been supporting the U.S. citizens and the corporations in the U.S. With these like COVID relief packages, right? With respect to the stimulus checks that we've been getting, the $1,200 that we got like on a monthly basis, some of the unemployment checks as well. Even though we are injecting a good amount of cash into the economy, which is good for livelihood, for U.S. citizens, but the cash that's being printed out, it has to come from somewhere, right? We can't just keep printing money for the sake of printing money and hope that it's going to be going away, right? Eventually, this debt, and this debt, aka devaluing our U.S. currency, is someone has to pay for it. And who's going to be paying for it? We are going to be the one paying for it. The corporations are going to be the ones paying for it. So this fear of inflations, and also on top of that, the 10-year Treasury yield spikes, it scares people away, right? Because eventually, I foresee this is going to happen, and I think Joe Biden has already briefly indicated this, that eventually it's going to be increase of tax rates across the country for both corporations in terms of like the corporate tax, in terms of the income tax, in terms of the even like our daily transportation costs. Like we might be paying more for our metros, metro trains, or our bus, or just our toll, or going through tunnels and stuff like that. Like all of these are subsequently going to increase, and the increase are not going to be like so drastic that it scares you away, but just like little tweak here and there, right? It might the metro cards or like the train tickets might increase by like 50 cents, or it might increase by like 30% or 20% here and there or so. Eventually we are going to have to pay for it collectively, right? um, because this money doesn't just come from nowhere. It's not printed out of thin air. So which, with this fear, of this margin squeeze for the profitability for a lot of companies, including Tesla, and also with this like devaluations of the US dollars, and just the overall macroeconomical downtrend that we are fearing off right now at the moment, is driving some downward momentum to the stock as well, right? So fourthly, for the tightening of monetary policies between U.S. and China, there's been a lot of media affectations and some publications around some of the potential adjustments to the monetary policies between U.S. and China, and knowing the fact that U.S. and China do a lot of exports and imports, and with respect, if there's a potential import or export tax um, rate adjustments, that can subsequently hinder a lot of the profitability margins across many different companies, including Tesla, which, as we know, we sell Tesla vehicles across the world, including China as well. I know they also build a gigafactories in Shanghai as well. But with this tightening, with a lot of the foreign exports and transport, that can hinder the bottom line significantly, right? So that's something that we also have to look out for. The fifth point, as I mentioned to your earlier videos, on my NIO perspective, the global chip shortage is something that we're experiencing right now, right? And with this chip shortage, it subsequently has a negative correlation effect to the production supplies for a lot of these EV vehicles, right? So that's something to look out for, but more of lower risk spectrum, as I mentioned, that this is eventually going to self-correct itself. It's not going to be a long-term detriment to the EV sector as a whole, right? Chip is just like one of the parts that they need to build a car for it to run, on a software perspective, right? And eventually, uh, these chip companies are going to catch up in terms of the supplies. I believe they're already doubling down on their efforts on the chip productions to subsequently sustain that demand that we are explosively getting in the EV sector. On Q1 seasonality in the automotive industry. So the reason I'm bringing this point up is because, historically speaking, Q1 or Q4 is typically like a down quarter season for a lot of these car companies. And the reason I bring this up is because like people typically don't like to buy cars around like wet or cold season, right? They like to stay home, they like to spend time with their family. And with that effect, that typically have some negative correlations to the stock price of the earnings performance. You see that a lot of like the Wall Street expectations for Q1 are typically lower in comparisons to like the Q3, Q4, especially for automotive industry, right? People typically like to prefer to buy cars in like drier regions of the world, right? You don't want to be buying cars in New York or like in Philly, or like in wet regions of the world, right? Or in the US, right? People like to buy cars like in Florida or like in Texas, like drier lands, if you may, right? And on top of the just in US, but speaking more on the international perspective, like Tesla and NIO both have Chinese exposure, right? Tesla has the Gigafactory in China. NIO is a Chinese company, obviously has correlations to China as well. And Q1 is typically a festive quarter for Chinese folks. With Chinese New Year as the or Lunar New Year, if you may, for for Q1. And when people are taking off in China, right? I'm talking about like vacations taking off. They typically take off like 2 weeks straight. So the quarterly performance, in a fiscal year calendar perspective, is typically shorter in comparison to other quarters as well, which subsequently have another negative correlations to obviously the financial metrics, if you may, right? Knowing the fact that they just have a less time duration in comparison. Move on to the technical analysis for Tesla, ticker TSLA. And just looking at a daily chart right now, you can see that ever since the whole S&P 500 inclusion, we rallied all the way up from the $400 level to the $900 level. And ever since then, we have basically sold off completely because of all the factors that I just mentioned to you guys earlier on why we sold off in Q1 and Q2 so far. And right now, we're basically trading on a sideways consolidating level. We have this lower high that we are seeing right now, which is a bullish movement. And you also see that there is a wedge that I draw here, and this is a wedge, a downward wedge, if to name it more specifically. And you see that we're kind of bouncing up and down within this wedge right now. We broke the wedge at one point because of the CPI news that broke out. Indicating a good a forward trend for the economy, which have this like that was like one of the black swan positive events that happened that drove this. But eventually, we kind of sold back down to this level, and right now we basically consolidate on a sideways level, and this wedge is basically going to continue happening up until I think a week before earnings, and I believe the earnings for Tesla is sometimes around April 26 or April 27, like the first day of the last week or a second day of the last week of April 2021. And eventually we are going to have a massive push up, right? Knowing the fact that we see again, right, the double bottom, with this higher lows that we see here. And also with this like wedge that we are forming. And you could see that the wedge is significant, enormous compared to historicals, right? Historically, we have like a much smaller wedge. If I drew this like hypothetically right now, or you drew this hypothetically right now, we see that every single time we form a wedge, we push up significantly, right? So right now, I think is a perfect time for us to get into the Tesla stock right now at the 738.85 level, right? And I think a good resistance point for us to look for, it would be like somewhere around this high right here, the 700, which is I see as another resistance level. The hundreds or like the flat numbers are typically a psychological resistance level, or like the tops that we typically hit for a lot of investors psychologically. So I foresee us, to slowly correct back down to earth, to the $700 level, and then continue to consolidate. So 700 would be the first level to look at, and then the next level would be somewhere around like the $670 level. I don't foresee us to be going back down to the below 600s anytime soon, or 585. Anytime soon, especially not within the next couple of weeks, a month. I foresee this is going to be consolidated sideways again, right? And then eventually push up by earnings, which is very logical. If you look at the chart right here, the wedge is basically closing around the beginning of May, which is the by earnings, which also occurs by end of by end of April as well. So this is a very logical chart, and I think right now would be the perfect time for you to buy at the moment. You could see that for Tesla stock, with the 27 analyst ratings right now, 11 buy, 9 hold, and 7 sell. And I think that the price target has actually been adjusted a little bit, slightly, compared to a couple of days ago. And you can see that the 12-month forecast is going to be $1,200. Right now it's an average of 701. I know we're trading a little bit lower than expected, but I think sometimes around earnings, as we learn more about how we're performing with respect to the chip shortage, with respect to some of the economical outlooks that we're going to be seeing, and obviously some of the major news that Elon Musk is going to reveal to us sometimes in the near future, this whole price target is going to be adjusted, right? And I think right now is a perfect time to buy. The 135 level on low, I think that's highly unrealistic. That just doesn't make any sense with respect to the whole EV evolutions that we're going to be seeing, and with respect to the massive growth that is going to be happening for Tesla going forward. numbers just don't make any sense to me. I think right now, again, right at the $700 level would be the resistance level that I just mentioned. If we go down to the 684, that's another resistance level that we need to buy up, to watch out for. Long term wise, I do foresee us getting close to 900 or $1,000 level. I don't know about the $1,200 level. I think that's just a flat number analysts like to put in. I think in 12 months or by the end of the year, I definitely see it like a 950 level. So shifting gears to look at the institutional ownership for Tesla stock, you can see that a lot of investors have been buying pretty aggressively. Just on yesterday, as of April 15, you could see that many investors across the world and across different asset management holding are investing heavily into Tesla stocks. Just yesterday, I think over like how many, like 20 managers have invested yesterday, buying like pretty significant shares, including the retirement system of Alabama. You could see that they bought some 310,000 shares, and yeah, they basically been buying every single day. So definitely building up some momentum going from there in terms of like the volume perspective and also with the respective supply and demand perspective as well. So definitely, another indicator of bullish signal for the stock to be propelling up, majorly going forward. So lastly, I want to give you guys my price target as a summary. So as you know, right now we are trading at 738.50 right now at the level. I think this is an optimal level to buy. I think it's totally fair. If we believe in this business long term, and you're not a day trader that just gets shaken out, for when you see a stock dip by like $50 or $40. So just buy now. I think this is a perfect time, to get into the stocks before it gets too late. I think by the time a couple months from now it hits 950, then you really miss out on this train right now. Like the train is really set to take off right now, and based on all the technicals, the business fundamental, it just makes sense to get in right now. If we ever go down to the whole 706, as I showed you in the chart earlier, we're bouncing within that wedge, the V column thing that I just showed you earlier. I think $700 level, or 706 to be more specific, is another level to look out for us to get in. If we ever go below 700 again, to like the $600 level, the next resistance level is going to be 672.50, and I think that's a great level for us to get in. I think it's a perfect steal. Any for Tesla to be trading under 700. So my end of year price target is going to be 950. And if we compare that to the current price point of 735.50, it's going to be an upside of 28.6%, 1.3 times your money within the next 6 months, which is, a very good return on your investments going forward. And that's it for today on Tesla stock. Really appreciate you guys listening to my insights and my perspective as well. Please, again, hit the like button below, hit that notification and the subscribe button below as well. I plan on posting about, right now, I think on a daily basis, or 2 to 4 times at minimum, in terms of my cadence going forward. I really enjoy doing this. And please stay tuned for my next video coming up. Thank you so much.